I also included the trend lines after the touch. You know, there are trend lines below the touch. Maybe if we draw something here like this, we get a trend line around this area, maybe a little below or above the Fibonacci level. Nevertheless, this is not what I'm talking about. I want to see the effect of the trend lines after the touch of the Fibonacci level. So we have seen a drop here, we have seen a corrective wave here. The corrective wave, after ascending slowly, finally touches the 61% level. This is the Canadian dollar against the Japanese yen for our chart. So we finally touched the 61.8 level at around 82.80. And from there we started dropping. Of course, if you have the stomach, as Mr. Lynch said, you would have sold here, because there is more than one reason to sell here. The first reason, of course, because today's technique is Fibonacci. The first reason is that we have a touch on one of the most important, if not the most important, Fibonacci level. Okay, and that is the 61.8 level. From there, we started dropping. We have our red candle, and that's the second reason to short. And we also have the RSI. You would say to me, but Munder, we are not in overbought. How come you say that the RSI supports the short? Well, if you were here on Tuesday, you would remember the RSI price divergence. The RSI price divergence happens when the price reaches a new extreme in the direction of its move, but the RSI fails to do so. So as you can see, it's obvious that this high is a little bit above this high, but it's still higher, and that satisfies our condition. While when you look at the RSI, this high is below this high, this top is below this top, and this is moving to the downside. The slope is to the downside, while the price does not have a slope to the downside. It has a slope to the upside, be it just a little bit to the upside, but it's still to the upside. So we have a clear RSI divergence, and we have a touch on the 61.8 level, and we have a red candle. And once we start trading below the moving average here, no one can blame you for shouting that you are going to make a lot of money on this trade. And the final nail in the coffin comes with the break of this rising trend line. Look at this beautiful and elegant trend line. One touch, a second, a third, a fourth. So when I draw this trend line and see 4 times, I just want to see the break of this trend line, because breaking a trend line after such a number of touches usually gives a strong move, generates a strong move in the direction of the break, of course, and that gives us opportunity. Look at this beautiful opportunity. I was not able to include all of the move, because when I did, this part of the chart became very small, and I want you to see it clearly. So I had to sacrifice a part of the move lower, but just look at this beauty. 82.80. If you did not sell here, it's okay. You sold at the close of the red candle, 82.60. If you did not, you would sell at the break of the moving average, 82.40. You know, all of these areas are shorting areas, and the final one is, of course, is breaking the trend line. No matter which one of the shorting decisions you made, the great and the brave one to sell here, the more cautious and wise one to sell here, or the little bit late but still exciting to sell here, in all cases you have made a huge profit. From above 82 to below 81 to 8, the chart ends here at around 80.70. From 82.80 to 80.70, we are talking about 210 pips just on this move, and of course the price even moved lower later. Okay, another example is the previous tops and bottoms, and this is very important. I have saved the best. Of course, all of these techniques are great. I believe in them all, and I hope that you guys will use them in order to have a better market timing. But in my opinion, I have saved the best for last, because nothing gives us an indication, and nothing delivers a message to us as price itself. RSI is great, moving averages are great, everything that we use to help us is great. We need that help in order to make the best decisions, but the price itself is the greatest of them all. Look at this. It's a crude oil daily chart, and of course it's also a very recent chart. The price started dropping in the spring until June, and then started correcting to the upside. When this correction starts, we should calculate the three key, let's say the three key levels. To me, these are not the three key levels, because in my opinion I prefer the 71% to the 38%, but these are the three that most used in the financial markets. 50%, 61%, 8%. Nobody can talk about these two levels in any disrespectful way, because they are super levels. But 38% is not that much. To me, I'm going to save you the trouble. It does not deserve the kind of attention that you give to the 61.8% level and the 50% level, and my own personal level is 71.4. Let's see what happens when the price starts rising in a corrective manner, obviously. First of all, we reach the 38% level. Here we have to make the decision. Should we short at the 38% or wait for the next one? If we take a look around here, we can see that the area around the 38% level has no meaning in the previous move. Okay, what do I mean by that? I mean by that is the price, when the price was falling, it moved through this area without any kind of respect. Here, just look at this move, very strong move to the downside. Do you see any attempt to recover around here? No. So the price level around these areas, which is 56.70, is not a strong level. So I expect it to hold on the way up. It did not hold on the way down, so I expect it to hold on the way up. Okay, just above it, we do have a better situation. Okay, around the 50% level, be it not extremely accurate, the price did try to recover around here. The 50% level is around 58.60. The price dropped to around 58, or even a little bit below that, traded a little bit above it. So it is an attempt. It's not an accurate attempt, but at least there is an attempt. So when we see this, we also need to look at the third level, and that is 61.8. Look at this. The price drops, 61.8. Level was around 60.50. On the way down, the price did stop very close to the 60.50 level and recovered significantly, around 300 pips. This is a huge move. So there is the kind of respect that we are looking for, very close to the 61.8. On the way down, we had this kind of respect. So on the way up, we should expect the same thing to happen. So it's very easy, guys. Just look back on the previous moves and see on the way down what kind of respect each level has received. To me, if I'm here and the price is rising and I want to sell, okay, I want to wait to sell at 38 or 50 or 61. I just look at the previous move. Here, it's an attempt. No, but it's not very accurate. Here, there is no attempt at all at 38% level. So I definitely would cancel any thoughts, any plans to sell at the 38. Definitely, with this kind of move, I don't have any kind of respect for that. Not me. I have no problems with 38% level, but the market does not or did not have any kind of respect on the way down to the 38% level. So I moved my attention to the 50-50. Yeah, I would consider shorting around 50, especially that the 50 is not very far from the moving average, the 49 moving average, the red moving average, which I value highly. So I say to myself, yeah, I may try to short here, but definitely not here. Here, yeah, I may try to short there. But if I continue looking back on the move down, I see that with this kind of respect, when the price dropped this much, and then stopped around the 60.50 and moved higher, I definitely give the most respect among all those three levels to the 61.8. So I rather wait for this. Okay, here, of course, a lot of people, even good analysts, would make the decision to short here, but just by looking here, I prefer this kind of price behavior to this kind of price behavior. This is accurate. This is not. This is an attempt. You can't deny, but it's not accurate. The price moved below it, above it, and then moved, and then continued moving lower. But here, the price touched it, moved just a little bit below it, and then moved much higher. And that's why I would respect 61.8% level more than all other levels. And as you can see, it is extremely obvious that the best decision was to short at the 61.8 level. And what is the factor that helped us make this amazing decision? If we did not sell here, of course, anybody with the ABC of technical analysis would cancel the thought to short at 38, but I understand that some people would short at the 50%. I think, you know, there's some basis to that, but geniuses would short here because they would look here and see where the price stopped on the way down. It respected this level more than any other level among this group of three levels, so I'm counting on this level. 61.8 at 60.50. I place my order to short at 60.50, and as you can see, it touches it a few pips below, above it. It does not even reach maybe 70 or something like that, so like 10-20 pips on an instrument that moves as much as the crude oil moves. 20 pips are nothing. It's like 5 pips on the euro, so it is nothing. From there, the price drops, and of course, if you have a short position at 61.8%, you will be dancing and inviting us to a party at your home when the price reaches these levels. Selling from above 60 and the price is at 55 or something like that, you are dancing, and then again another leg down, another party at your house. So we are coming. Okay, just a final note on the final example before we wrap this up. I was talking about the respect that the price gives to the Fibonacci levels on the way down. This can also manifest itself during attempts to recover while the drop is still going on. You can see this move. We have a great move to the downside. When the price or the bulls jumped in and wanted to push the price higher, it also stopped at a Fibonacci level, the 50% level, extremely close. So we have a short position here. The recovery attempt stopped very close to the 50% level, and this is also an opportunity to go in. And as you can see, whether you sold here or even here at the beginning, you are now in unbelievable profit. Okay.